Good morning, ladies and gentlemen. My name is Simon Taylor, and welcome to episode 117 of the Fintech Insider Breakfast Show. God, can you believe it's 117 already? As you know, in this show, we bring you the best and brightest from around fintech every single weekday, straight into your homes at 8:30 British Summer Time, apart from on Mondays and Wednesdays, when we go live at 3:30 British Summer Time or 10:30 in the East Coast for our US friends. Both shows live here on 11FS LinkedIn. Today's topic is the Singapore fintech scene, which in the last few years has grown to become a world leader in fintech, largely around the Singapore Fintech Festival, with some smart and innovative solutions playing a vital role in the city's ambition, some amazing big techs, some amazing fintechs, and some interesting policy. And joining me to talk through all of this today is Ned Phillips, who is the CEO and founder of Bambu. Ned, how is it doing, sir?
I'm good, thank you, Simon. Nice to chat to you again. And you've made my Friday already. You said you speak to the best and the brightest. I'm not sure if I qualify for that, but as a Friday, I'll take it.
You have to be because you have a podcast now. Do you want to tell everybody about your podcast?
Thank you, Simon. You're too kind. Yeah, Wealth Tech Unwrapped, a podcast we recently released, inspired by the likes of 11FS, doing podcasts as content. So really, we just, as it says, we try to unwrap everything about wealth tech. We're on episode 7 and learning a lot and hopefully entertaining everybody.
It's unwrapped as well, which sounds like a present, sounds like a gift. So you'd be wrong to say no to a gift, listeners. So do check that out. As always, remember we love getting those questions from you. So as we're going through the conversation, comments in the sidebar, we'll be answering them live for you. Do remember to comment. It really allows you to drive the direction of the show. So we're excited by now. Alrighty, Ned, do you want to start off with what's Bambu? Because it sounds a lot like Mambu, and that could be easily confused.
You know, we may or may not have had a few calls from banks going, hey, we're looking for Bambu. And we're like, it's not us. They're like, and we're like, but are you after wealth tech? Hey, we can help you. So I hope Bambu maybe have got a few misdirected Bambu calls, but they're bigger than us. So we've probably been the positive recipient, but we know those guys anyway. So we are as you talked about, the Wealth Tech Unwrapped podcast. So we're a B2B firm. We design, build, and integrate saving and investment apps, commonly known as robo-advisors. So if you're a financial institution in any part of the world, and if you're an American, you think you want your own Betterment or Wealth Run, or if you're in the UK and you want your own Nutmeg or wherever it may be, and you don't know how to design it, how to build it, or how to integrate it, call us. We're a 4-year-old firm, 70 people, 20 banks use us. And as I tell everybody, it's been the best fun I've ever had in my career. But as my wife reminds me, it's been the least I've ever got paid. But that's startup life.
That is startup life indeed. And just before we get into the Singapore side of things, I'm interested in your view. One of the things I hear a lot from when we talk to banks about the wealth space is that they can put in place a robo, but what do they do with all of their humans? You guys have some interesting thoughts about what you do with data and how you make the humans smarter with data. What are your thoughts there? What's the role of a human in the machine age?
Yeah, look, it's not a zero-sum game. I push against the narrative that it's a binary. Is it humans or is it computers or robots? And I think this word of robo-advisor, I know we've mentioned this before, Simon, I think it's I know it's the term that's stuck, but in reality, there isn't a robot giving you advice. Like if I had a robot to give me advice, I'd keep him to myself, and if he was making money per se. But I think what we're saying is this: for an advisor, if you're using 0% of technology or of data, you're definitely missing out. Mm-hmm. Is it going to 100% replace you? That's on you. That's your decision, because the data can help you have more customers. You don't want to deal with a customer who has $100 to invest. No bank wants to spend time talking with them day one because that's not commercial. So we think data actually is the gateway to getting to that customer in the very early stage of their investment life, so that when a human should be speaking to them, they understand them. They've gone from millennial to Henrys to high net worth, etc. So yeah, we really think it's a net positive overall.
There's the common conversation in the UK about the advice gap, which is people nearing retirement and not knowing what to do. And it's getting harder to know what to do with retirement. Do you take a lump sum? Do you look for an annuity? Some pensions were missold 20 years ago. What do these people do? And how does the human and the technology really come together in that sort of space?
This is a fascinating topic in that I know we're going to talk about Singapore, but I think globally, wealth investment retirement is complex, too complex, right? I often start some of my pitches when I say to somebody, how much do you need for retirement? So I'm not going to say to you, Simon, how much do you need? You don't need to say the number on air. But in general, people
People
don't
don't
really
know.
know. Yeah, people don't know. And I think the advice gap is very real because it's complex to know what products. And I think we're not going to solve it overnight. So it's not get a robo, everything's solved. But I think two things are happening. Regulators are understanding that we need to make this simpler to understand. And then technology is the way to access that rather than just relying on branches and humans. Technology can present it in a simple way. So the advice gap exists and it will slowly disappear, but it's definitely a problem.
So the financial independence retire early movement, or the FIRE movement on Reddit, has the conversation, what's your number? And it's interesting to me that when I've logged into most of the wealth fronts, the betterments, they tend to focus a little bit more on your, like, what wage do you want to be getting when you're 60, which is kind of interesting because we view our future selves as a different person. But actually, by focusing on this number, it's making it more like a game. Like, that's my goal. I have to hit that number. So what's your number? So you calculate that number based, and I think something about being involved in the calculation of that yourself as an individual moves the responsibility back towards the user in a counterintuitive way. So I wonder if there's things there that we can play with around what's the number. I love that that's your first question.
Yeah, so and we built something called People Like Me. So one of our little algorithms about financial planning is this. So I'm going to assume, Simon, you watch Netflix. I do, right? And when you watch Netflix, it understands what Simon likes to watch, and then other people like you watch something else, and it recommends you something, right? And that works well. And we built something in the wealth space that says, okay, you're 30, you live in this borough of London, you have one kid, you earn this income. People like you over time have got to this number. Let us tell you what relevant people have done throughout time. People like you, what is the goal? What is the number? And I think that's important because I think the debate in Robo is it active or passive? Is it ETF or mutual fund? Honestly, that's the wrong debate. That's not how you get to retirement. Mm-hmm. It's if you started saving at 18, you would be much more likely to get it, but you don't start saving at 18 because it's very hard and the number is kind of not irrelevant, but you can't really think about it. So I really agree. If data enables us to get the number so you can be real and people like me are doing that. Oh, everyone else is doing that. Okay, great. Let's do that. So I think we'll see over the next generation, people won't be asked, what's the number? The number will be there.
Yeah, that's exciting. Well, we're going to get to the Singapore fintech scene, not the Singapore syntech scene that I nearly said, which is quite fun to say, but not the one I was going for. Let's talk a little bit about it. I think until recently, everybody talks about the UK and London as being the fintech hub, and actually the world has really changed. So tell us a little bit about how Singapore is different and how it's similar. What are the things that really spring to your mind, given your knowledge of both areas?
Sure. So I appreciate this show goes out globally, as most people could probably tell. I have a UK accent, but I've been living in Asia for 30 years. So I moved out here in the 1990s, spent 11 years in Hong Kong, have been in Singapore for about 18, 19 years. And what I would say is what's similar to perhaps London and some of the other great fintech centers is there is a concentration of what's needed. Investors, startups, and government encouragement, right? So I think if you have any center, being at London or wherever, San Francisco is a bit different because it has the whole valley. But Singapore has government encouragement, right? So there is an encouragement to try new things. There's grants, there's the regulators help. Then there is a VC scene that in Asia, there's a lot of money, but a lot of it comes through Singapore. So there's an ability to get investment. And similarly, it's, there's a billion, 2 billion, depends what you call nearby. Within Singapore, Singapore's very small, 5 million people, right? But nearby, there's a huge amount of tappable market from that. And the one thing that is new, and I say this with all great respect to Singapore, 10, 20 years ago, startup wasn't a career that a graduate would probably put his hand up. And that's what was different, Simon. 10, 20 years ago, it was the safe job at a big four, at a bank was very much, and I think even if we had started 10, 20 years ago, would we have attracted the talent to come to a startup? I don't think so. So that was the big difference. And what's really happened is, we get hundreds of applications a month. People want to be in a startup, and Singapore has this less risky type of attitude, partly in its DNA, and it's been incredibly successful. And Yeah, the biggest. So that was the difference. But now that's what's really happened. And of course, the Singapore Fintech Festival, when we were first told, hey, there's an event coming, it's out by the airport in a kind of a hangar at a convention center, and 10,000 people are coming, we were like, yeah, that's not happening. And we went there and there was 15,000 people. That was 2016. Last year, Simon, there was 60,000 people at that event. It was crazy.
That's nuts, isn't it? It's become such a global center as a result. And now you see, I mean, listeners and viewers, you may be aware of the virtual banking license, but it might be worth talking through what that is and some of the things the Monetary Authority of Singapore has done, because you mentioned, a willing government. Can you give some examples of what that means? Virtual banking licenses, what else as well?
Sure, absolutely. So I think it starts with, we heard this term of sandbox and encouragement, but I'll never forget, and I can give maybe the most clear part of this, like a statement. So 2016, we go to the Fintech Festival, and Ravi Menon, who is I was going to say CEO, forgive me, it's the number one guy at the MAS, stood up on stage, and behind him was a big screen, and it said, in part of his speech encouraging fintech, so 2016, it said the MAS has no objection to the cloud whatsoever. And it was the word whatsoever. And of course, the MAS has done a great job with regulations. And every fintech festival, what's happened, the statement is clear. We're encouraging you to learn. We're encouraging you to do new things. We'll give you grants. We want 15,000 people, 30,000 people, 45,000, then 60,000 people. That event was organized by the MAS. That wasn't a private company. That was the MAS who put that on. And so they come to a startup like us and say, a booth for a startup like us at the Fintech Festival was 2,000 Singapore dollars, £1,000 to access 60,000 people.
Wow.
That's clear statement. We want you to succeed. It's been
Compare
great.
that with Money 2020 that might allow 20 in and 20,000 other people, but it's quite a different thing when the government is really pushing it quite so hard, and it really stands out when they're willing to stand behind cloud, because there are still people in the big banks, or even if you're scaling a fintech startup, you have to hire some of that knowledge from a regulatory standpoint, and there's a lot of implicit bias that, well, I can't use cloud because I'm worried about these third parties. And actually to just say, yes, we're fine with you using it, you still have to figure out how to make it safe and secure, but there's nothing in principle we have as any issue with it. I'm interested in what our viewers think. What do our viewers think has been the tipping point for Singapore? Where do you stand on any of the issues that we're putting out? What do you want to know more about? Get your comments into the comment bar and we'll absolutely get those to Ned. Ned, I'm interested in if you've seen kind of a change, especially accelerating. I saw the recent Y Combinator summer batch had about 5 or 6 different startups that were, maybe it had 25 startups that were fintech, of which 5 were based in Singapore. And there was a real movement towards this SMB and business banking space in the Singapore scene. Help me manage my cash better, help me deal with cash flow, and a lot of that sort of space that we've really seen. What trends are you seeing coming out of Singapore in terms of the fintechs? What are the things that you see on a day-to-day basis?
Sure, I think it's, it definitely changes over time from, blockchain payments, wealth tech, it comes and goes. Definitely, obviously, not just in Singapore, but based out of Singapore, payments is very important, right? This, idea that, the Grab and the Gojeks, the super apps are powered by these payments. So I think that really is, really critical out here in Asia, not just in Singapore. Again, I'm slightly biased on wealth tech, but we've seen since COVID that, clearly it is hard to meet people. Advisors are not meeting people. People are worried about their savings. People are going to digital. And we did a kind of webinar piece of research about what's happening during COVID. Are people saving more? Are they investing? And I think we've all seen the numbers from the custodians, the clearers, the brokers. They've been skyrocketing. Singapore's similar from that perspective. Also, I think, the SGX, the Singapore Exchange, just announced today that they're launching some indices around cryptocurrencies. Mm-hmm. So that's a topic which I think the Singapore MAS and the government had put some emphasis on. So, but if I had to pick one, I'm not going to be biased and pick wealth tech, but payments would be the one which I think has, particularly with the number of people in the countries right around Singapore.
And if you look at there's a really good study by the guys over at FT Partners in their recent quarterly review, I think, where they said if you look at the price to earning multiple of all of the fintech categories, payments has the highest. It's absolutely the thing that is probably best positioned to be a real platform for finances. It starts at the payment and it kind of builds out from there, and everything that kind of comes around it. Singapore's interesting for payments as well, because when you go to checkout, there's like 8 different sort of payment technologies and terminals popping up. You can use all the stuff coming out of China with your Wees and your Allies, but then UOB and DBS have not been quiet in this space. Rewards are really, really big in Singapore. Is it worth just diving into the culture of rewards? Because that's probably not as, maybe it's a bit more familiar to the US, but in Singapore, it's a whole different game.
Yeah, look, the cash back, the rewards, definitely an important part. And I think the banks here have, the DBS and, I think when they stand up at conferences now, obviously during COVID, not so much, but virtual, but they call themselves the digital bank of Singapore, the disappearing bank of Singapore. They've made it clear that, they're going to power everything digitally. But rewards and payments is an important part. I think, Asia, I've lived in Asia 30 years. People save, they don't spend on credit, right? The use of the credit card's different. And cashback is, if you spend in my establishment, we'll give you 1 cent in the dollar back, right? So you spend some money, you get some rewards back. You collect some points make prizes, as we know. Those prizes return prizes in the theoretical sense. So I think that cashback and rewards, and you mentioned the digital bank license, and, Razer, which is a company, maybe not familiar to a global audience, unless you're younger and play games, which is obviously one of the world's great hardware companies, but obviously one of the applicants for the digital banking license. And I think it was 2 or 3 years ago, and I hope I don't butcher this statement. I try to remember it like this, so if I get it wrong, because I'm going to mention, I think the PM, the Prime Minister of Singapore, was on, I believe, one of the social medias, and were talking about encouraging payments. And as you said, have more companies looking at payments. And the guy, the founder of Razer, Ming Liang, wrote something, and again, I hope I don't get this exactly wrong, but hey PM, DM me for payments. So it was this snapshot of hey PM, DM for payments, and Razer just released their results, and they went from a gaming company to a payments company, and their last results shown that they've done a really good job with that, and now they're applying for a banking license, and they make points from gaming. So again, you're right, rewards, points is very big over here.
And points is something that gamers understand, and the culture just kind of all fits together there. And you look at what Epic and Unity are doing with the game engines and the potential around that. That whole subject is hugely exciting. So there's definitely a generational gap for people for whom gaming and esports is completely normal, of which there's 500 million people in an absolutely massive market, and a whole bunch of new financial services challenges that kind of come with that. And the giants of tomorrow will absolutely come from that space. I completely agree with Gary Vee. It's only just getting started on that side. And then payments again is that thing that keeps coming back. I'm interested, Ned. There's actually a great question here from Sajid. So Sajid, thank you for the question, which is, are you finding that the venture capital scene in Singapore is as supportive as the regulator, or are they more risk averse? Is the sort of VC a bit more family office based? What's the VC scene look like?
Sure, thanks for the question. Yeah, so I think it's definitely matured over the past, 5 to 7 years. We've raised 15 million US, and to be fair, we've raised quite a lot of our capital in the US, so Franklin Templeton and Peak Six, but we've also raised from investors, Wavemaker Partners here in Singapore, and Octava Family Office. One thing I would say is, I really do think, I would say 5 or 7 years ago, there was quite a gap. You were either seed or you were 10 million, right? You could raise, you were going Grab or Gojek, and I think there was quite a gap. If you wanted 2 or 3 million, that gap was harder to fill. I think that has matured quite a lot. So to answer the question, I do think today that the VCs do cover more, from the seed to those middle, what we call Series A in Asia, 1 to 5 million, 2 to 5 million. That's been filled in the last few years. There's more money, there's more encouragement there. But the one, and 10 and above, and I think when Grab, showed, I actually did a report for an investor about 7 years ago, and 7 years ago, a family office said to me, we don't invest in Singapore companies because can you show me a Singapore tech unicorn? And apart from, maybe some of the, and forgive me, there was the chip maker here or one of the, in general, you couldn't. But today you can, right? Whether it's Grab or Razor. And I think what's happened is the belief that you have to go to the valley to find the unicorn is not necessarily true. And you can find it in Asia. So, but the one last thing, as I'll say, is family office definitely important here. Great family offices in Singapore, and that's growing a lot.
Interesting to see that that's really, really changed. There's a good question here from Lucy Heavens, who asks, we did talk a little bit about the tech for the investors. We mentioned very briefly the role of the human and the relationship managers, but Lucy believes that they've been left in favor of the client-facing tech. Do you think that's true? And what does a relationship manager need to succeed in this world?
Yeah, I thank you for the question, Lucy, but I would say this. Any advisor who's lost the client because of tech is on him. It's on him or her, whoever the advisor is, because tech is an enabler. But if you don't use it, you're right, you're going to use the client. So, Lucy, I would say there are advisors who are, and again, I'm being a little extreme here, are pen and paper still. And clearly they're going to not die figuratively, but they're going to struggle. And yes, I would say a lot of clients are happy just to not use an advisor and just to go straight to that client. But we build both for the end client and for the advisor. You put a video chat for an advisor into a customer journey that they can click it when they want to speak to the advisor, not the advisor chasing them. We've seen 2-3x of conversion, right?
Yeah.
So I think there is a lot of ways that the advisor could really use technology, really use data. But what we are finding is the majority of them are not. So they are losing. But I would say, respectfully, it's on them, because the tools for them to double, triple their client base are right in front of them.
And I guess in COVID times as well, it's really important that you can maintain that human relationship, even if it's via video. And the ones that are willing to adapt to that and still use it, because it's clear to me that the clients still, some clients especially at certain points, want that empathy, want that reassurance. They want the thing that no computer can ever give them. But are the advisors willing to adopt that, and are they ready for that? And is there a new generation? I'm interested in what you think the new normal starts to look like for Singapore fintechs. Have we been through a bit of a transition through the COVID period, and how's that playing out in Singapore in particular?
Yeah, I think there was some announcement that the Singapore fintech. I nearly messed up that as well, Simon. The Singapore Fintech Festival. There's been some announcements that it's going to be partly virtual, partly in real world. I think the new normal. Obviously, there's still a way to go before we come out. And do I think we all go back to work? I think we go back to work, and I'm definitely quite. I'm excited to get back to the office. But what I do think about is that it's very clear that, particularly in wealth tech, that the old normal of we can charge you high fees because wealth is hard, complex, and manual, that narrative is dead. Mm-hmm. That narrative doesn't exist. And I think, Singapore, we're geographically small. We have one of the great things here, we have MyInfo. So MyInfo is a centralized database. So no fintech can say it's hard to onboard a client. It's there, a great government resource. And I think we come out of this with, I don't think there's great excuses not to have, and I'm not saying get rid of all the humans. I don't think any Singapore institution or fintech, maybe financial institution, I think they're going to struggle to say, oh, we're not going digital because. No, Singapore's provided you the ability. And again, it's not, I think there'll be double or triple AUM. I think we need more advisors. I think we need more users. So I think the usage increases of humans, but I think the institutions, any institution that says, oh, I don't go digital because in Singapore, I would enjoy that debate, because I would be interested to hear what they say.
Wow, yeah. The competitive advantage of the human is still there, but it's got to be come out through digital channels increasingly more. There's a last question here from Sajid, because I know we're getting pushed on time. He asked, around the cashback offers and the payment methods that the different wallets are seeing in Southeast Asia. Where's all that going? There's so many wallets, so many offers. Are we going to see discount wars? Are we going to see, an oversaturation of different wallets? Are we going to see some sort of aggregation? How does that play out?
I don't know. So thanks again for the question. And again, we're not specialists in China, but I used to live in Hong Kong and I've been in China a lot. When you look at the Ali app or the WeChat app, for all the listeners, just Google it. Google Ali or WeChat screen. It's completely different from we're used to. A screen that's clean, Revolut, simple, super clean. In the WeChat screen, it's got like 30 logos on the front screen with rewards everywhere. I actually think there is most people here have 6, 7, 8 different, accounts. So I think from what we see, and again, I'm not a reward specialist, but I think the app would manage multiple rewards. And yes, there will be competition around discounts and rewards, but I don't think just one wins. I think people are happy to have multiple. And I think an account aggregator for reward points would be a very good idea in fintech. So anybody, that's my tip of the day. Build a rewards aggregator. It's maybe out there already, but yeah, there's room for a lot of people.
We're seeing and hearing very similar things. That's all I'm allowed to say. But you do operate on a global stage as well. Do you think that digital is going to really help you guys go into the global stage? Like, what's next for you after Singapore? Are you just doubling down on the Asia market, or are you looking more globally?
No, thank you. I mean, we already have about 30% of our revenue from the US. Got 4 clients there. We work with about 20 global financial institutions. Yeah, I don't think we had in our business plan, let's start globally, but about a year in, a company from Brazil called us and we were like, okay, let's do that. And then we got investment from Franklin. So for us, our long-term plan is digital wealth can be distributed globally. We have clients globally. For us, we've actually just launched a scalable product in the US. So US and Asia, main 2 markets, then UAE. But yeah, I'm 53. I don't have many years. I don't know how long I'll be working, but by the time I'm not done with Bambu, but I really want in the next few years for us to be the recognized global leader in digital wealth. That's where I'm aiming.
That's a great thing to want to be known for. So I think that's a good ambition for all to have, the recognized global leader. Look, and conscious it is coming up to the top of the hour and we've got days to get to. So thanks for joining me, Ned. If people want to find out more about you, where do they do that?
Sure, bambu.co, so bambu.co, or Ned Phillips on LinkedIn. That would be the best place. And I'll ask me any questions. You want to hear about Bambu, contact me there.
And Wealth Unwrapped is available on iTunes now.
Thank you very much. I nearly forgot. Wealth Unwrapped, Spotify, iTunes, Apple. It's all there. You're a podcast professional, Simon. I appreciate it.
I got you, man. Alrighty, thank you so much for joining us. And that's all we have time for today. Joining us again on Monday, please do check out 8:30 Monday, where we're joined by Kat Mann, who's head of PR at Nutmeg, which is very topical. And we're talking about female investors. Have a great weekend, everybody. Goodbye.
Thanks, everyone.